The Federal Reserve delivering a long-awaited interest rate cut today, reducing the cost of borrowing by 1/4 point. The central bank also signaling that 2 more cuts are likely before the end of the year. National correspondent Atra El-Nashar has more from Washington.
It's the beginning of the end of what's been more than 3 years of increased interest rates.
Today, the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point.
The Fed has 2 mandates, price stability and full employment. Fed Chair Jerome Powell said earlier this year they had been ready to start cutting rates, but when the president rolled out his tariff policy, they decided to wait to see how it impacted inflation. Now that the labor market is showing signs of weakness, the risks unemployment and inflation posed to the economy have come more into balance.
While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation.
Inflation is still higher than the Fed would like it. Central bankers' preferred gauge shows costs rising at an annualized rate of 2.9%, a ways off from their 2% target. To show how eager Americans are for this rate cut, applications to refinance mortgages spiked 58% last week from the week prior, according to the Mortgage Bankers Association. President Trump has also been extremely impatient in wanting to see an interest rate cut for months, publicly berating Powell for unchanged rates.
He's done a lousy job. The rate should be much lower.
Wednesday's cut brings the federal funds rate to between 4 and 4.25%. In July, the president posted on social media, our Fed rate is at least 3 points too high. The Fed only meets twice more this year, in late October and mid-December. Their median projection of an appropriate federal funds rate by the end of the year is 3.6%. The next big inflation report is out next week, Friday. In Washington, I'm Atra El-Nashar.